The Investment Advisory Committee to order. Please take the roll. Whoever's doing the scribbling or, yep,
Councilman Tron,
here.
Treasurer Cromies, Cromis, sorry, and Executive Renane is not here yet.
That's okay. Is everybody a chance to see the minutes? Treasurer, have you had a chance? I have.
I did, yes.
Okay. The chair will move that we approve the minutes from the previous meeting.
Second the motion.
Second the motion. Any discussion? Hearing none. All in favor?
Aye.
Minutes are approved. There we go. We'll just keep the train moving. Public comments. Is anybody signed in for public comment today? Would anybody like to, because we're not such a formal bunch, would somebody like to have a public comment? How about that? We will keep you the same 3 minutes, so whether you signed it or didn't. Good morning. You probably have to push the mic.
Yes, good morning. William Tarter is here as a citizen. Just had a quick question. I got the agenda yesterday, which I appreciated. Just wanted to see if we are still offering a live stream component for today's meeting, virtual accessibility, because I didn't see a link included. Just want to follow up on that.
I couldn't speak to that, whether we are live streaming this meeting
excellent.
Or not. But
Excellent.
you're live, so you're streaming, right?
Excellent.
That's
Okay,
right.
thank you so much. I just wanted to make sure that I get the word out about the work that's being done here. So thank you so much.
Okay,
Thank
I can't say, anybody know if we are live streaming this? Oh, yeah, there you
Yes,
go.
excellent.
There
All
you
right,
go.
just wanted to make sure I didn't
There
miss
you
the
go.
link. Thank you so much.
You can go back home and get your pajamas on if you need to. The next item we have is the opiate portfolio.
Councilman, can I jump in real quick?
Sure,
before we get there?
absolutely.
We're just to go back to introducing myself.
Oh,
since we
yeah,
didn't
oh,
do that
sure,
yet.
absolutely.
Since I am the new face in the
You
room,
might
I
as
just
well,
wanted to go ahead and handle that.
Milk the crowd.
Yeah, thank you. So I'm Brad Cromis. I am the new Cuyahoga County Treasurer. I was sworn in on the 24th of October and started working here yesterday. So still brand new, but I'm very much excited and looking forward to working with all of you on managing the county's investment portfolio. And then gentleman from Meter, who I've had the privilege of working with in my past career life. Looking forward to hearing their presentation today as well. So I just wanted to make sure you knew who I was. We're here to serve. My staff is here as well. And if you have any questions as members of the public for us at any point, feel free to reach out and we'll be happy to help you. Thank you.
And your dad would be proud of you wearing his bow tie. Thank you. That's right. The opiate portfolio is the next item. It's item 6 on the agenda. Brandy, are you going to be presenting that, I assume?
Yes, I
Okay.
am. Hi, all. This is my first time at this meeting. Brandy Carney, Director of Public Safety and Justice for the county. And congratulations, Brad. Nice to meet you. Mr. Chairman?
Sure. You have the portfolio and you want to cover it. You're going to have, you got slides on it?
Sure. I do have a few slides. Eileen, if you, did you want to start with first one? Hi, Chris.
Morning. This slide is the current amount of the $60 million that's invested. This is the market value of the investments that are held for the opioid asset allocation.
Okay.
So
Okay, go ahead.
If I could just briefly, and I apologize for all the colors, the sheet that you have in front of you, that many of you have in front of you, that's the colored sheet, that just gives background on the opioid fund for all of you. It does identify at the top of the sheet in green the $128 million. That's the money that we received for the opioid settlement, plus some of the internal investment that's gained on this. The $60 million that's been at NEDR for approximately 2 years was a 5-year external investment we did to increase our gains on that money. Are there any questions?
The only question is only because I had some involvement with it. The transition to the $5 million that went over to Cleveland Foundation. Any comments on that first meeting? I know there was a kickoff meeting.
Sure. Thank you,
don't
Mr.
have to be-
Chairman.
You don't have to be as colorful as the two of us were a little bit ago.
Thank you, Mr. Chairman. We
Yeah,
invested.
Let the record reflect that the county chairman, the county executive is now here and handing the gavel over him literally and figuratively in that respect.
Thank you, Mr. Chairman, Executive. We did invest $5 million for the Opioid Innovation Fund, which is really exciting. We have put together currently a 7-member board that includes Chairman Schron, as well as Director Herdig and some external individuals. Really exciting. The goal is to identify, as innovative as it sounds, a solution for opioids. And there's a possibility that we might be able to find, or at least, help individuals in a pretty significant way here. So we did have our first kickoff meeting. We invested the $5 million in a money market fund through the Cleveland Foundation. The kickoff meeting, the Cleveland Foundation led. We're still working through some of the particulars on how those meetings will be structured. But we're looking forward to it and hope for additional investments to gain on that $5 million is the goal.
So I have one question,
Sure.
if I may ask, and forgive me if this is me being relatively new, but there's 19-ish million in the cash account right now, waiting to be reinvested. I just don't know if you have any thoughts as to what the long-term guidance is with respect to the plan for the use of the opioid settlement fund, if that's something that should be reinvested on a longer horizon line, shorter. If you just have feedback on that, I'd be interested in hearing it.
Absolutely. So I have advocated to reinvest the $19 million that we've gained. We do have enough cash reserve in the current account that's at the county with the funding that we still have that's not externally invested. So that would be my recommendation for those funds.
Okay, do you have a horizon line in mind? So could we go out as long as 5 years? Would you prefer that be shorter?
I would prefer, I want to make sure to speak with the executive on this funding for the exact amount. That's why I didn't have it for this meeting, but by the next meeting, I'll have it.
Okay, fantastic. Thank you.
And on that same point, we had allocated, the previous county executive had indicated $10 million to go into the opioid innovation fund. County council only approved the first $5 million, with the other $5 million be held in reserve, with the idea that if there's other matching funds, county council would then approve the other $5 million. I think that there are some serious conversations about people wanting to make contributions in there, so we could get that matching fund. We could go from the 5 to, with a matching fund, to another 5, that gets you to 15, and then all of a sudden now you're moving into the 25 or 30. So you could be very impactful with an investment portfolio out there for businesses. But I believe the 5 million, if you look, you'll see there was there was 10 million originally allocated for the Opioid Innovation Fund. It just only got $5 million got approved by the county council.
Councilman Tron, I just wanted to add that I was speaking with the Jason Weiner of the Cleveland Foundation, and the current balance of the fund is $5,124,020.44.
Yeah, we're making money.
We're making money, and he will have another update for me next week.
Okay.
So he didn't have a current update. That was from the last quarter.
Thank you. Thank you.
Well, good morning, everybody. I think my official duty is to move us from item 6 on our agenda to item 7. But before I do that, I do want to quickly introduce Eric Janis to those who don't know him. He's our Chief of Staff, served actually in a capacity as the lead staff to the Investment Advisory Committee in Franklin County, where he was last as Deputy County Administrator. So welcome, in addition to, you've already welcomed Brad Cromas, and welcome again. We Glad to have you. And to all the staff team, thanks for the work going into this. Let's go to, and our consultant team, let's go to the operating portfolio.
Thank you, Executive. Okay, so go to the next slide, please, Ricky. All right, so the first one is our STAR ARPA fund, and then that's our STAR Ohio Maine. Those are the two top funds. And then these key PNC, US Bank, those are our three banks that the financial institutions that we do run our operations out of. And then the investments are below. Down at the non-general funds, you'll see the money market mutual funds, opioid sweep. That is the $19.8 million. That's the opioid funds that Brandy was discussing that we've been waiting to reinvest based on the timeline that she gives us. And so we can work on that for the next quarter. The investments, I'm going to not go into them. I'm going to let Jason and Jason take over the investment portion of our portfolio.
And the only one comment, only because we have a lot of new people on the committee, can get you up to speed on one item that's sometimes doesn't pick up the attention because it's small amount, but the foreign notes, it is the one place we're allowed to invest in foreign notes, and we have invested in Israeli bonds. And I don't believe we're at our maximum. We're probably, what are we hovering around 1% as opposed to 2? I think we can go up to 2.
We can go to 2%. We're at 0.4. We're just under 5%. 0.5%. We can go to 2%.
Okay, we're at 0.5.
0.5.
So we're
$1 million.
we could actually
So like
increase it.
22 million.
Yeah, by another 1.5. Okay, and at the rates that we're earning, it's a pretty decent rate as far as long-term money at the 7.5. So I just advise that that we take a look at that and see, because it's a place that it's the only foreign investments we're allowed to make.
Yeah, I appreciate that, Councilman. Thank you. Yeah, we'll be having conversations with our investment advisors about that and making a plan for that going forward.
Okay.
All right, thank you to our consultants.
And this was the rate, Star Ohio rate at the end of the quarter. And then the rate for today is 5.57.
Anybody's guess as to how long it's going to be that we could keep that, as opposed to investing in Israeli bonds?
That's why we have them.
Okay.
Sans crystal ball.
Okay, all right.
Perfect. While we were pulling this up, we'll go ahead and dive in a little economic update, what we're seeing. Certainly a lot going on out there, but what we heard just this week from the Fed, no big surprises. They left rates, they remained unchanged at this point in time. Still sticking with the, hey, we're going to remain where we're at. Market is back and forth whether early next year we do get one more bump up or whether they maintain at these current levels through the mid part of next year. But the Fed really has settled into this wait-and-see mode. On the screen now, you'll see, taking a look at the employment picture, looking just regionally, Cuyahoga County, right in line with what we're seeing both on the national and on the Ohio level. So certainly not elevated, so great to see that it is in line from that standpoint. But on this chart, you'll see one of the big questions that we keep getting is, with everything the Fed has been doing, has it been effective? Should we be expecting something else out of the Fed? And really taking a look at both from the job standpoint and the inflation standpoint, they have been effective to this point.
Sorry. Right, that's my fault. The attachment was the September month-end report. I apologize. I'll send it to everybody.
Yeah, where'd this come from? No problem. So yeah, taking a look at the big question being, is what the Fed's doing, has it been effective? Have they accomplished what they want to from both the job standpoint on the left-hand side, but most importantly, what they've been targeting from the inflation standpoint. So looking at whether you're looking at core personal consumption expenditures or the headline numbers, both of those have been coming down, have been a very positive trend. So from that standpoint, while certainly they would have hoped it would have been going into effect much more quickly, it has been, historically speaking, come down quite a bit in a relatively short amount of time. Now, on the next slide, really takes a look at really the nice thing to all of this is that if you look at the the orange bars there, that's what the economist surveys, the expectations were from a GDP standpoint. And that the Fed has been successful in accomplishing everything we just talked about, but they've done it in a way where the economy has not been hurt to this point. It's actually remained fairly elevated compared to what we would have expected and what the economists were expecting going forward. So all in, they would call this a victory. One little anecdote there on the side, you'll see Taylor Swift and Beyonce will take credit for this, as they've added $5.4 billion to GDP during Q3, which helped, but probably not the main driver of all of this. But although even things have been going well, there are some cracks. And we were just speaking about this earlier, Councilman Sharon, where you're starting to see some weakness. One of the areas that we are looking at is you're starting to see these increased delinquencies. And really across the board. So whether you're looking at the auto side, the credit cards, the mortgages, those have all been elevated. The one area that hasn't to this point being the student loans, but with the student loan forgiveness coming off, you would fully expect those to begin in that same trend. So this is one area we're continuing to watch, that as you've seen those begin to elevate, some of these getting back to pre-COVID levels now at this point. Again, one spot that, again, the consumer's been very resilient. The spending stayed up. But when you're starting to see the delinquencies creep in there, we've seen credit card use continue to remain elevated. People have been eating the savings. So at some point, the spending has to stop, which has been propping up the economy to this point. So again, starting to see some of these cracks that could point to the dreaded R word here at some point in the near future. From the Fed standpoint, again, similar.
Jason, can I ask a follow-up question
Yes,
on
yes,
the
sir.
R word?
Yes.
So we're some distance now from when the yield curve inverted. Do you have a read on where we are with respect to projections on when things might come to a head with respect to that, or no?
Well, it really a few things that depend. If you go back to some of the major indicators that you typically see, so the inverted yield curve being one of the main ones, and typically with that, it's 18 to 24 months after the first inversion is typically when you'll see the recession coming in. So that would have happened last summer. So we're a little over a year into it, 15 months into that cycle. So historically speaking, you would say you would be within a year of that time frame. Now, a lot of variables that go into it. There was some precedent back at the beginning of the COVID crisis. There were a lot of things happening that were signaling we should have been slipping into one, but there was a lot of support from the government side that really kept that from happening. Do you see something like that happening again? Do we allow that to happen, or the recession to actually take place this time? Those are some of the things that we'll be watching, but just historically from a cyclical standpoint, you would have this next 6 months to a year.
Still in the window, okay.
Yeah, yep. Yeah, but from the Fed, the dot plot, again, where they see rates being at the end of each of these years, the big thing here that we continue to see, and you see this whether you're looking at the market and how they're pricing in rates, you're looking at economists from the Fed, the big takeaway here is lower going forward. When we look at towards the end of next year and beyond, that while we are staying elevated here in the short term, and they're not looking for this to be a complete pivot back, and with fears that there could be some sort of a rebound to inflation if they reverse course too quickly. Staying here for at least some period of time, whether that's 6 months or so, remains to be seen. And again, the data-dependent language that you continue to hear, but ultimately they are all on the same page that the direction is lower from here. And one other interesting thing that, just as we look at, again, not a proven economic indicator, but just of interest here, the soft landing speak that you start to see more and more of in the market has actually been a pretty good indicator historically. When you start to see this creeping up, it's usually right before the dreaded R word that we were talking about, recession, and we have seen that elevated here. So just the more it's talked about it there, typically it's just historically that's been a pretty good indicator that we're getting really close to that happening. So any questions on the economic standpoint before we flip it over to Jason Click to get into the portfolio?
Nope. All right. Great, thank you. Back to the earlier comments, because I think it leads very appropriately into portfolio structure, talking about the strategy of the portfolio overall. As Jason said, on average, we're 18 to 24 months historically. The exact average over the last 10, I believe it is, recessions on an inverted yield curve is 21 months. So if we go purely by that measure, it says somewhere in the next 6 months, we should see something move. Now, the counter to that is, as Jason said, there's a lot of activity going on that, frankly, we're on the precipice of, we could go either direction. If the Fed wanted to push us into a recession, they could, from here, do that fairly easily by just pushing rates forward a couple more times in the short term. Now, the more recent comments have indicated that they may not necessarily intend to do that, but the whole question revolves around, are we in this, from a historical perspective, you see a lot of press around this higher for longer concept. That's the question. So around soft landing or higher for longer, or as you look at what the economists are saying and you look at what the market is pricing in, back to the dot plot. The dot plot is what the Fed is saying. The Fed says we're going to move lower. Economists say we're going to move lower, and we're going to move lower faster than what the Fed is saying. And the market says we're going to move lower, and we're going to move lower faster, again, than what the Fed is saying. So all of that coming into the pot, if you will, making sure that we're creating the right stew as it relates to economic conditions and what the market is offering us. We want to continue to make sure that we are moving forward in the most balanced way possible, that we aren't making an extreme bet on one end or the other, holding significantly short, knowing that there will be a time, it's not an if, it's a question of when, but there will be a time that rates roll over. So we want to make sure that we're taking advantage to the extent that we can by extending the portfolio out as long as we can to lock in these rates. Because while the curve is inverted, we're looking more and more flat within our world here, 0 to 5 years. Relatively flat across the board. So relating that back to the portfolio, so flipping to the slide, where we stood as of the end of September, the end of Q3. The overall portfolio invested amount stood at just under $930 million. Moving to the middle, the weighted average maturity of this portfolio was just under 2.5 years, 2.48 years. The weighted average yield moved up from Q2 to Q3 to 2.41%. That was a move of approximately 15 basis points or 0.15% throughout the quarter, which puts estimated annual income for the overall invested portion only, this does not count Star Ohio, other holdings, at just over $22 million. Comments around the allocation in the upper right and then the maturity distribution on the lower portion of the screen. We continue forward on the allocation, again, focusing in on higher quality investments with approximately 75% of the overall portfolio being allocated between U.S. government agencies and U.S. Treasuries, in line with really where we have been over the last couple of quarters. The remainder of that being spread across credit, from municipals to commercial paper and short-term corporate notes, corporate bonds, making up that additional 25% of the portfolio. So while spreads overall have narrowed between treasuries and any type of credit investment, opportunities do present themselves from time to time where we can take advantage and we can pick up some additional yield spread. Where that opportunity presents itself, we are absolutely taking it. Within the quarter specifically, as we've talked about this significantly in prior investment advisory committee meetings, we had 2 instances that presented themselves where we had the ability to swap securities, to sell out of lower yielding securities. We even were able to realize some gains within the quarter, even though there was, we're in this, flat to continued rising rate environment. So we produced some positive realized gains within the quarter, and we were able to reposition a couple of securities to take advantage of longer rates for a longer period of time. We continue to identify opportunities there. Within the fourth quarter, I'm foreshadowing here a bit, there have already been some opportunities that have presented themselves or that we see moving into the range where we will be able to move forward with a couple of additional swaps in terms of repositioning the portfolio overall. So the actual maturity distribution, as you see, very similar to what it was at the end of the second quarter. We stand at the end of the third quarter at just at 25% of the overall portfolio that will be maturing within the next year. So between combinations of swaps or the ability to sell shorter-term maturities at shorter-term securities at gains, continuing to reposition that portfolio and moving out, again, keeping that broad, diversified spread along the maturity distribution.
I probably could ask this in the first meeting I was ever at this year, but on the yield and annual income, do we set, and it's probably not the time to ask it in the next 2 quarters, but do we set benchmark goals or as benchmarked to other urban counties? I was curious how we do, if there are goals and how we're doing relative to the goals.
We do.
Yeah.
So we go in and that historically from year to year, that's information that we provide into the treasurer's office. That is then shared with the budget office. So we are projecting really it's leading in to the fiscal year that we will provide those projections based on a combination, really where we see rates at the time, and then some indication of where we see rates moving forward. But yes, we are absolutely doing that from year to year.
And do they trend towards something less than 4% or on the percent yield? Or I'm just wondering order of magnitude. I'm imagining comparable governments of our kind aren't in the double digits, so they're in the single digit mids.
Actually, they're going to be very much in line with where the county's
Okay.
portfolio is.
Okay.
So a comment to that, I think continuing to focus in fact, if we flip 2 slides forward will help present a little picture of this. But go back 1 quickly. This will be a quick note. Everything in compliance, this is important, as of the end of the quarter. So just wanted to make that note. But flip 1 forward. So when we look across the various benchmarks, so we are tracking this. Star Ohio not being a benchmark, but we want to show where are short-term rates, Star Ohio. We want to show generally where have rates been moving. So the benchmark, which you'll see in the footnote, and this is a benchmark that has been utilized by the county for some period. This was not established by us when we stepped in. This is the benchmark that we were asked to continue using. It is the 2-year average of the 2-year treasury. Okay? So when you look at this across the spectrum, Star Ohio is short-term. It's going to roll over, meaning it can reposition its entire portfolio in about a 30 to 45-day period. So when rates move, Star Ohio is going to move right in tune with rates. The 2-year average of the 2-year maturity, mathematically, that says you can reposition an entire portfolio or the benchmark in 1 year. 1/2 of the 2-year period, everything's going to roll through. So you have 1 year to reposition. The county's portfolio, which back to your question, which is a very good question, when you compare that to other like-size urban counties, the larger counties, particularly within the state, and frankly, purview out into the rest of the country, those that have similar state statutes in terms of limitations on investments, those on average are going to be weighted average maturities that are going to fall in that 2 to 2.5 years. Some will go a little longer, but 2 to 2.5 years is fair. That says again that it's going to take 2 to 2.5 years to reposition an entire portfolio when you have rates moving up. So on the counties across the larger counties across Ohio, which Brad can even speak to this from his prior experience at Portage, 241 is going to be toward the higher end of the average across portfolios that we see those coming in today. They're going to range anywhere from, they're all above 2, but it's going to be in the 215 to at an absolute maximum 250. So it
That
is
helps.
right in line
Yeah,
across.
we're right there.
Yeah,
High
right
end
there.
of being right there.
Right
Yep,
there.
thanks.
So the whole concept again of, to turn a battleship
Yeah.
takes a minute. And
Yeah.
that's the process that we're moving through to keep up with the rates.
But the county executive's question, I think he was alluding to whether or not there's double digits in any governmental investment. They're,
No,
you're not gonna find that here.
I
So-
qualified and said, you're never going to find those. That
Okay,
was what I was
okay,
saying.
well, I hope you weren't coming into this committee expecting.
No, Jack, that's exactly what I was saying. Is it would presumably be lower than 5, and you said exactly that.
Absolutely.
So, yeah.
Okay.
Well, and that's the reason I brought up the Israeli bonds at 4.7. That's about as good as you're going to get long-term money that you can get, even though it's only 2%. I think aren't we, wasn't that 4? I think,
2 max.
with 2% max.
2%
Yeah, but
max.
I'm talking about the interest rates, that you get the yield on
Yeah,
those.
they've moved, they're trending right now, the spread is 5-year 50 basis points to the treasury.
Well, thank you. Other questions? All right, rolling along. Want to have a discussion about investments or just keep going?
So the
Go
final
through it.
comments we would
Yep.
make, so going back to the opioid settlement fund, some of it which has already been discussed, but if we flip the slide forward one, this is looking at the current positioning. I would highlight what's already been mentioned and we'll be working through. There was just shy of $20 million that's sitting in the cash sweep, again, yielding 5%, so it's not sitting there yielding nothing, but looking at the opportunity to lock some of those rates in, which will be continued conversation with the treasurer and staff to make sure we get this portfolio positioned appropriately. But the key, flipping forward one more slide, again, from a compliance standpoint, everything is in line as it should be within the settlement fund as well. That concludes.
Just on your slide right there, could it have its own separate foreign investment?
It could.
So we could actually exceed 2% theoretically on, if you look at this as a separate fund. So this could be at 2% and our core corpus could be at 2%?
Correct. Yeah, which, and so long as the overall, including cash, bank deposits, the county's entire portfolio remains less than 2%.
Oh, okay, so you can,
And that's.
Yeah, that's statutory.
Yeah, that's statutory, correct.
okay.
Okay.
Trying to double count. No, I was actually trying to coordinate, trying to block that out as a separate fund. If it's a separate fund standing outside, could it have its own separate? Could we create its own separate rules for just that? Oh,
Still falls under the governance of Ohio Revised
Ohio,
Code
yep.
as assets of the county.
the $5 million is not. That's got a separate investment portfolio that we're outside of this.
Yeah, the $5 million is technically those are technically assets of the Cleveland Foundation.
Right.
So those are not tracked here as part of assets of the county.
Yeah.
At least the assets that we are managing.
Right.
Yeah.
Thank you. Any other questions? Okay. Well, thank you, guys. Appreciate the work you're doing. Jason, thank you. I guess we're on to other business. Q4 meeting date we've got, Jan 25. I can't believe we're already looking at 2024. Any other items of other business? Old or new? Anyone? I want to thank, for the interim period that she served, I want to thank Lisa Rocco for your work, and thank you. Job well done and smooth transition to our next treasurer. So to both of you, congratulations and thank you. And as always, appreciate the work of our whole staff, but our fiscal officer. Congrats to what you and Katie have been doing out in the community with the Great Estates program. I just want to say it's been wonderful. So if there's no other business, Councilman, anything else you got to say? Okay, well, thank you. We will adjourn, and a very efficient meeting today. Thank you much, everybody. Appreciate you.